If you're new to the channel, welcome. This is my dividend investment portfolio. Started this portfolio September the 5th, 2023. Pretty much only depositing $200 a month. I deposit every 8th and 23rd of each month, $100 on each of those days. Which turns out to $200 a month. Current net worth of the portfolio right now since starting is $870.65. Moving on to how the portfolio has been doing overall. Right now, the portfolio is up 19.62% from starting, and in market gains, it has been $71.98 in market gains. If you're curious also on how much I've also earned in dividends, it's been a total of $3.01. Right? That's just proof of concept to me. This is just a start, the beginning, and we're nowhere near to the end, right? Just a little bit of background on me. Started this portfolio when I was 18, currently 19 years old now. Started it in September, turned 19 in September. So, yeah, been in it for 4 months now. If you watch my previous video, I talked about investing the $100 that I did deposit into my account on the 8th of December. I went on and held that as cash while the market was pretty much going up, right? I didn't want to buy into any stocks at a higher valuation that I already have now that doesn't seem feasible for the long term. This weekend, I'll probably go ahead and take some looks at some what stocks I'm going to be investing my $200 into. Now, since the market has kind of cooled off, just going to give it a little bit more time if needs be. Of course, I want a dollar cost average down, not up. Lower the better, of course. And that's going to be my game plan pretty much towards the end of this year till I start living off of dividends, right? If you're also wondering why the $200 is there, that's why. Okay, deposit $100 today. The $200 is from the 8th. Okay, just to touch on my holdings as well, if you're just curious on what I'm holding, here go all my holdings. I hold 3 ETFs and a total of 17 stocks and ETFs in total. Here you go if you want to see also the gains that I'm on each stock, how much I hold. Here it is. You can go ahead and pause the video and take a look. But overall, we're going to go through it individually anyways, right? So pretty much if you're also curious on what platform this is M1 Finance. There will be a referral link in the description if you want to try this platform out. I like it. It allows me to just put in money and allocate slices or different categories that I want to invest in a certain amount, pre-allocated. And it's pretty much very, what's the word for it? Relaxing. Horrible choice of words, but well, we digress, right? Moving on. These are the 6 slices into my portfolio. I got dividend, industrial, consumer, tech, finance, and real estate. Okay, those are all the different categories of stocks that I am invested in that M1 Finance allows me to create instead of having just 17 stocks, each getting 2%, right? I can allocate this a little bit more differently and pretty much take advantage of this programming, if you call it that. I don't know. Moving on. Let's go ahead and touch on the ETFs. With the ETFs, holding strong on them. When I first started this portfolio, I had QQQ in this ETF batch. You can go check out the last video, but to summarize it a little bit, it wasn't the last video, it's one of the few videos I've made. Just summarize it. I sold it just because of the risk tolerance. I felt like it's like 40 to 50% all tech, and my portfolio doesn't have that many tech stocks into it. And tech is a very profitable and a very non-profitable if you invest in the right time and in the right way. In the right type of stocks, right? With QQQ, it's 48% of the stock market, 48 tech companies that are in the stock market, and I just think that's too risky for me, right? But moving on, from just the ETFs themselves, we have earned a total of 72 cents in dividends, 65 cents from SCHD, 4 cents from VOO, 2 cents from SPY. Okay, those are just the 3 ETFs that I'm holding. Don't plan on selling any of them anytime soon, but I don't mind selling them if anything happens to where it's time to sell, right? And time to take action on something else, right? Or if I see a better investment, whatever happens, just don't plan on selling at the moment of making this video, right? Next thing, industrials. This is pretty much all my industrial stocks. Um, on this slice, we're up 16.58%, which is $12.63 in market gains. I'm not really too worried about the market gains. I'm really just here for the dividend, the earned dividends, growing my investments, and of course, sooner or later, living off of those earned dividends, right? But with this slice of the portfolio, I have four different stocks: Caterpillar, Lockheed Martin, Waste Management, 3M. Pretty much been holding these stocks pretty strongly. As you can see, they're mostly up more than 10% each one, except for Lockheed Martin, which is a little bit falling short. But hey, we still move on, still pretty decent. If you're curious on how much I've earned in just this slice in dividends, it's been a total of 61 cents, which isn't bad at all. 23 cents from Lockheed Martin, 15 cents from Waste Management, 15 cents for 3M, and 8 cents from Caterpillar. All right. If you want to check out one of my last videos, I don't remember which one exactly. It'll probably be at the end of this video. But on 3M, when the lawsuit came in and they owed like $8 point something billion, and then the CFO stepped down, I allocated a lot less to 3M. 3M would be more than a $10 investment right now than it is. But that was just a learning process for me. Instead of allocating more when it went down to 80, I think it was like $85. Now it's all the way up to 100 and some odd dollars. That was my buying opportunity right there, and I just missed out on it. That was a mistake that I made, and we move on, we learn from our mistakes, and we still got years to come. Maybe something else will happen to 3M, and there'll be a better buying opportunity, right? But overall, that's it for the industrials. Holding strong on all of those. Don't plan on selling any. And if I find any to add, I most definitely will do so. All right, consumer. There's not too many stocks in this one. It's only two. I got Home Depot and Costco. In earned dividends, we've earned 40 cents in dividends. 31 cents from Home Depot, 9 cents from Costco. We don't have a full share of Costco yet, but I know they're doing that special dividend where it'll be $15. I think I get around like $2 from what I hold. Not exactly sure. I have to double check on that number. But yeah, overall this slice of the portfolio is up 27.81% and $18.79 in market gains. With these two stocks, don't plan on selling them anytime soon, especially Costco. As you can see, up 30% on Costco from investing into that stock right there, and also up 25% in Home Depot. That's the main reason I saved my last investment from the 8th of December as cash, because as you can see, the portfolio's been, I don't want to use the word skyrocketing, but it's been going up, right? I don't know the better terminology for it, but it's been doing pretty decent. So let's leave it at that, right? So with this slice of the portfolio, the consumer, no problems here, no sales here. Just buy and hold, and just wait till they come down a little bit more. Because buying at 30%, if you're also curious on my buying price, I'll actually tell y'all right now. My buying price, $551 for Costco. Current price right now, $671. That's a huge difference. That's almost a $200 difference. A little far from that, but that's $100 and some odd dollar difference, right? And if I buy in now, that's just going to bring my average share price to a lot higher than I really want it to be. But we're just going to find a better buying opportunity, and we move on from there. And if you're curious on Home Depot as well, my buying price for Home Depot, average share price is $298.61. Current share price for Home Depot is $348. Right, almost $100 there, a little bit short, $50 I think. But yeah, we move on, right? Those are both holds. Wait for them to come down a lot more, as you can see. But yeah, we digress. We move on. Okay. Now my tech. I know I touched on tech just a little bit, but yeah, I don't hold too many tech. I hold Intuit, Microsoft, and Apple. I think those are pretty much the main three that need to be held for my portfolio, of course. Pretty much just how I feel on those stocks, right? I'm not really a techie person. Let me not say that. I'm a millennial. I think so. I'm a millennial. I don't know, but yeah. Pretty much I use tech all day: computers, cell phones, iPads, The damn cars got tech in them now. But when it comes down to investing into tech, I'm not too confident. I would say confident. I'm not there yet to the point where if it goes down 40-50% for whatever reason, I can roll through that, right? I've been through 3M going down 20, almost 30%, right? I should have bought in at that time, but I didn't know at the time, and it was a learning process. But with these three stocks, I know if they are down 30-40%, that that's a great buying opportunity. Put in as much money as possible, because these are pretty much big stocks that I wouldn't say they can't fail, but all companies can fail and have their ups and downs, but sometimes those downs don't last as long as the ups, right? If that's the right phrase. Don't know. I don't think that was the right phrase, but we move on. Y'all get it. But yeah, so in this slice of the portfolio, I've earned 10 cents in dividends, 5 cents from Microsoft, 4 cents from Apple, and 1 penny from Intuit. And also I've earned $9.47 in market gains just from this slice of the portfolio, and 16.55% is what I'm up in this portfolio. I know you see Intuit up 30%, so we're just going to see what price, average share price I'm at. I'm at $534.05, and Intuit is at $624.07. So dang near $100 over my initial buying price, or dollar cost average price, I should say, right? Overall, portfolio is doing well. If you're curious on Apple as well, here we go. Average buying price for Apple is $181. Current price is $193. Okay, and then if you're curious on Microsoft, here goes Microsoft. Microsoft is $374. My average price is $345. Okay, but yeah, overall, this size of the portfolio, I may possibly add to it. Don't know exactly what stocks right now in the tech category I will add to it, but just right now. It is a hold, or these three are a hold. Don't plan on selling any of them unless I have to. And yeah, I think these are mainly for the growth of the portfolio, not mainly for the dividend, because they don't really pay high dividends like some of the other stocks. But we digress. We move on. Here for the growth. Here to outperform the S&P 500, so on and so forth. All right. Touching on our finance. Okay, finance stocks, we may have some sales, possibly, if I find something better, which I might have. I don't know just yet. Just going to look at the fundamentals of the company that I'm eyeing. Just let you know what that is Visa. Just looking into Visa, see what price I can get in at a decent price, which doesn't affect my portfolio too much. But yeah. We move on. In earned dividends, we've earned 15 cents from this portfolio, 5 cents from S&P Global, 5 cents from JP Morgan Chase, 3 cents from American Express, 2 cents from MasterCard. Okay. When I say adding Visa, I may switch out 2 out of these 4 stocks, which is American Express and JP Morgan, into Visa. That may be the only change that happens in this slice of the portfolio, but I don't think that'll happen soon. But I am keeping an eye on it, see how these 2 stocks treat me, or if I should just add Visa to this slice instead of just taking out those 2, added as the 5th part of the slice, right? But it's all a thought process. It's all fundamentals of each company, and do I feel comfortable on holding all 5 of the companies at one time, right? That'll be practically every bank except for Wells Fargo, which that's one investment I'm not looking into. Haven't even touched on Wells Fargo, if it's even a stock. Don't even know, to be honest with you. But yeah, overall, this slice of the portfolio is up 19.83%, and in market gains, we are up $11.77. If you want to wonder my buying price for each and one of these stocks, here we go. This one is American Express. Buying price is $151. Current price is $185. All right. Next one, we're just going to go ahead and do MasterCard. MasterCard is going to be $424 current price, and average share price is $495. All right. Next one, we're going to do S&P Global. S&P Global right now, current price that I'm holding at, our average share price is 368.75. Current share price is 434. Right, not too bad, not too shabby. And then the last one, J.P. Morgan Chase. Current buying price is 144. Current stock price is 167. Okay, if you're curious on those numbers, there you go. All right, now final slice, and I'll go back again and do the other two ETFs and industrial, so you can see my average buy price in those. But yeah, last one, real estate. Only hold one holding in this portfolio, or this slice of portfolio, which is Vici. Realty Income, can't pronounce it, stock ticker O. That one I'm just not, let me not say confident. I think it is a great investment, just not a great enough investment. Let me not say great. I think it is a good investment, just not a great investment to be added to my portfolio, my real estate portfolio at least. I think Vici pretty much wins it all right out. Pretty much 100% of the real estate slice goes to Vici, and currently I hold $78 of Vici, which is 2.5 shares, and I'm up 12.82% in market gains, and I have $7.84 in market gain as well. In earned dividends from Vici, I've earned $1.03, which will be my highest paying stock, highest paying dividend out of one stock. And pretty much category as well. I don't think there's a category that paid me $1 yet. But yeah, highest paying stock, highest paying dividend paying stock that I've got earned over time and slowly growing it. With real estate stocks, they're most of the time the highest paying ones anyways, so it's not too out of the ordinary for something like that to be happening, right? So if you're curious on my buying price on Vici, I think it's like $28.60. That's my buying price. Yeah, $28.60. Current price is $31.34. I think anywhere around that $29 mark, I'll continue to buy Vici, to be honest with you. I think 31, I don't think it's too high, but I mean, the lower the better, of course, right? And since Vici is not a very expensive stock, as we can see, I currently hold 2.4 shares of it right now. Just going to keep building up shares slowly but surely, and over time, keep earning those dividends, live off of the dividends, so on and so forth. All right. Now, that's pretty much my real estate stock. Those are pretty much all my slices. Let me go back for you guys and show you the dollar cost averages for each, or average share price for each one for my industrials and my ETFs, and then we'll call it a video. Right. So Caterpillar up 25% on that one. Average share price is $252, and current share price is $290. Buying price. So pretty big difference there. Decent difference there, not big, but pretty decent difference. Lockheed Martin up only 5% right now. My average buying price is $434. Current price is $448. Okay. Next one. Let's see here. We got Waste Management. Waste Management, I may make the anchor of this portfolio where it'll be the largest holding instead of Caterpillar. The reason Caterpillar is the largest holding is because I bought in at a better price, the dollar cost average at, and that's why I'm up whatever percentage I'm up on it. But for Waste Management, I'm currently average share price 157. Current buying price is 176 of the stock. Right? Let's see here. So yeah, that's why Caterpillar is the highest one at 25% gain, because I bought in at another price. This bolded number at the bottom, the 24, is the correct allocation, but right now it's at 39. When I found a better buying price, bought in. That's my previous price was at 290 for Caterpillar. Now it's like we just saw 252, I think it was, and that's just a better buying price for me. I took action on it, and it worked out, right? We just looked at Waste Management. Let's go ahead and take a look at 3M. 3M is the only stock that I've made a mistake on so far in this portfolio, and I'm sure going to make some more in the future. But right now, my buying price is $94. Current stock price is $106. I remember when 3M went down to $86, $85, and instead of reinvesting or investing money into it, I pulled back and didn't invest as much as I did before. Which was a mistake. You learn from it. We move on. There will be better times. I won't say better times, but there'll be other times where I can buy into other stocks at a very decent price, and we're just gonna take advantage of those opportunities, and we move on, right? But yeah, overall, let's go ahead and check out the ETFs, and I think that's when we'll call it a video. If y'all got any questions for me while I'm posting these shorts every day that I do post, shoot me a comment. I'll reply to it as soon as I see it. And yeah, but I'll go ahead and touch on these ETFs. SEHD current buying price $70.73. Current stock price is $75. Let's go on ahead and go to VOO. VOO is, or sorry, Spider. We're gonna go to SPY. And just to touch on that real quick, I know I'm holding VOO. No, I'm holding SPY. They're both the same exact stock, pretty much. Only difference is the expense ratio, and which actually 3M shows now. I didn't even notice that. It shows their expense ratio there. That's pretty much the only difference between the two. One expense ratio is lower than another, and sometimes one ETF has better performance than another. I just said, you know what, just get both of them. Right now, I don't see a problem at holding both of them. If I was to choose which one to hold long term as just a primary stock, really don't know which one I'll be, to be honest with you, right? I like both of them, right? If one's down 10%, another one's up pretty much flat on the day, right? Or if one's up 20%, another one's up 20%, whatever the price is, right? We just move on. But yes, I know they're overlapping. I completely understand, but I just feel like that's more comfortable for me, and that's just how I invest, right? We're not always going to agree on something, but we digress. We move on and just live our life as investors. For this VOO, right? Yeah, VOO. Average share price $403. Current share price $435. Right. Well, I'm hoping you guys enjoyed this video. This was a little bit of a shorter one. Didn't go in depth on all the stocks like I usually do, but yeah, overall, right now, just to summarize, $200 in buying power right now. Haven't reinvested the full 200 because of the market's been soaring. Poor choice of words, but we move on. Yeah, so once the market cools off a little bit and if I find better buying opportunities for some stocks, then that's what we'll do. But other than that, like I said, if you're interested in this platform or brokerage that I use for my dividend investing, it is called M1 Finance. There will be a referral link in the description if you want to check it out. If not, I appreciate you for watching this long. If you made it this far, I most definitely appreciate you. If you're new to the channel and you haven't subscribed yet, make sure you subscribe so you don't miss out, and join the journey with me to this pretty much living off of dividends, hopefully in the next 15 to 30 years. And yeah, this is just the beginning, the start, and we're nowhere near to the finish yet. Just make sure I don't forget anything. If not, I think that's it. I think I touched on everything. I don't edit here, so we don't edit the videos in this channel. We keep it raw. Yeah, that's it. Wow, okay. That was first try. Okay. Yeah, like and subscribe. Got any questions, please comment. Got any criticism, please comment it as well. I want to hear it. It teaches me a lot more. Yeah, I'll see y'all boys next month. Oh, next video is going to be coming out on the 30th or the 31st. That's what I was going to say. 2024 predictions, goals, whatever you want to call it, will be coming on, let's say, the 30th, if not January 1st. All right? I'll catch you boys in the next video. Peace out. Subscribe. And I appreciate the support.